So this one chart confirms that most people just missed their last chance to retire on Bitcoin. We can see that for the past 4 years, the number of addresses holding 1 Bitcoin, 0.1 Bitcoin, and even 1% of a Bitcoin have all been declining. And many people have been asking the question, has BlackRock co-opted Bitcoin? Why do the little guys not want to buy Bitcoin anymore? Why is the majority of the Bitcoin demand over the past 5 years only came from the elite, the BlackRocks, the Michael Saylors? Why do supposedly 98% of the Bitcoin supply, why is it locked up in the hands of 1 or 2% of Bitcoin addresses? Today, I want to be answering all of that, and I want to talk about what this most recent price action with Bitcoin means for all of these questions. Yesterday, we saw one of the worst days in Bitcoin history. You can see it on the chart. We crashed to $58,000 on some exchanges, and right now we're at $70,000. Why did it crash that hard, and who, more importantly, bought the dip? Again, it's not often you see a $10,000 candle to the downside and then to the upside. So today I want to be talking about all of that because obviously everybody is hyper-focused on this one chart with the Bitcoin price. Right now we're at about $71,000. But let's start by looking at the charts and the data, because somebody actually sent me this chart and they asked me the question, Luke, has Bitcoin failed as money for everyone? And to be honest, this chart's actually pretty interesting. We can see that the number of addresses holding 1% of a Bitcoin actually peaked in 2023 at 13 million addresses. And you can see today we're still stuck at 13 million addresses. It's kind of strange when you think about it, because a lot of people say, oh, Bitcoin's seeing this exponential adoption phase. And it's true, we are. But why is the data not reflecting that? Because it's not just addresses with 1% of a Bitcoin, it's addresses with 10% of a Bitcoin. This peaked in 2023 at 4.6 million addresses. And then today we're at 4.5. We've actually declined over the past 3 years. Something similar, we can see this with addresses holding 1 Bitcoin. We can see 1 million addresses held 1 Bitcoin in 2023. And now we're at 970,000 addresses holding 1 full Bitcoin. And what's interesting is I started diving into the data a little bit deeper. Now, what's interesting is this is normal when you think about things from first principles. We know today that there is somewhere around 20 million Bitcoin mined. So out of the 21 million coins, 20 million of them are already in circulation. So it's kind of natural that we'd see a little bit of a slowdown in the growth of addresses holding a specific amount of Bitcoin. And if you look, the bigger the number of Bitcoin in an address is, it's going to peak eventually. So we can see addresses with 10,000 Bitcoin. This actually peaked all the way back in 2016 at about 125 addresses. Now, if you scroll down, what's really interesting is now let's look at addresses with 1,000 Bitcoin. Let's see when this peaked. We can see this peaked about 4 or 5 years later in 2021. And then the addresses with 100 Bitcoin, this is actually seeing something really interesting. See how this initially peaked all the way back in 2017, but now it's picking back up again. This here is highlighting what I think many people are concerned about, which I, by the way, don't think is a bad thing. We are seeing institutions entering Bitcoin in a really big way right now. And I think a lot of billionaires and a lot of $100 million net worthers, they are right now buying a significant chunk of Bitcoin. They've been hedging over the past couple of years. This is why you can see this number of addresses of 100 Bitcoin go parabolic since mid-2024. Now, this is super interesting because if you actually look at the price of Bitcoin, let's zoom this chart out a little bit. What's the price done since mid-2024? It's been a choppy stable coin, if we're being honest with ourselves. It's gone up a bit, it's gone down a bit, but since mid-2024, we haven't seen a lot of action in the Bitcoin price. What we're seeing is a lot of manipulation. What we're seeing is, to Daniel's point, hedge funds blowing up all around the world. We are seeing some really interesting things. And what I think we've seen for the past 5 years, and to the broader point that I started this show on, is there's an argument to be made that we've been in a little bit of a bear market for 5 years. That's what I think some of the data is showing us. I don't think we're seeing new retail entities. I think the only people buying Bitcoin today are the millionaires and the billionaires and the $100 million net worthers. And again, I don't want to get speculative today and say why that is and why we've seen a coordinated FUD campaign with Bitcoin yesterday. Again, think about all the similarities that yesterday shared with the 2022 Bitcoin bottom when we crashed to $16,000. At the time, everybody was worried about Bitcoin's proof of work mining. BlackRock was talking about ESG. The World Economic Forum was saying, oh, proof of stake's better. Again, ask yourself why the World Economic Forum like a proof of stake cryptocurrency. Again, there's a very good reason why they hate proof of work. But again, we saw all of that coordinated FUD campaign that pushed Bitcoin to $16,000 last cycle. We saw it all again yesterday. There's rumors of massive exchanges blowing up in Bitcoin. There is the quantum computing FUD. Even think about the timing of the files being released from Island Boy, that gross human being. Think about that. And all of the coordinated FUD campaign of people calling Bitcoin money for criminals. Think about all of that coming out in the same day and the same week. Again, we've got the whole NOTs versus Bitcoin Core debate, which has been simmering under the surface for some time now. Again, I always encourage you, when you see this type of coordination and max bearishness and max pain, that typically marks, if not major bottoms, but local bottoms. Again, who remembers this clip from Peter Zeihan on the Joe Rogan podcast that came out nearly to the exact day of the bottom way back in 2022.
And now it's starting to be priced appropriately. So it has a, what's Bitcoin at? 16,000? It has another 17,000 to go down.
Really?
Yeah, there's no intrinsic value to this product.
And do you think that people have just inherently lost faith in the idea behind crypto because of FTX?
Well, it became an ideology, and whenever you invest based on an ideology, you're going to make some decisions that are a little divorced from math.
And what do you mean by ideology?
Well, the people who really like crypto are convinced that it's the currency of the future and that a decentralized ledger is the way to go, and that anything that is controlled by a government entity is by definition a negative, and if it's done by the private sector freely, it will be better. And that's just not how currency works. Currency is a method of exchange and a store of value. And for that, there has to be a degree of trust, and you have to have it managed in terms of volume. I mean, one of the craziest things about Bitcoin is that there will never be more than X number of units of Bitcoin. Well, by default, that means it can't be used for trade, because the whole idea of economic activity is that there's expansion, which means you need more currency to lubricate and manage that expansion. If currency is locked in at a specific number, you get monetary inflation, and that is one of the fastest ways to destroy an economic model.
So because of the lack of Bitcoin, because there's a certain controlled number, the only thing that can happen is Bitcoin becomes more expensive.
Right. And that means that the people who hold it are the ones that make the money, but everyone else suffers? I'm sorry, that's not viable. The alternative is you have some private dude out there who generates the coins on a whim. How is that different from the monetary reserve or the monetary authorities that we have at the Federal Reserve, except for the point that there's no accountability? No.
Okay, so who counted how many factual errors there was in Peter Zeihan's clip? A 30-second clip. How many? I counted about 7. He's completely wrong. But I think he highlights what I'm trying to point out today. You will see max pain and max bearishness at bottoms. And this is where most people are too scared to buy. And this is why they will not retire on Bitcoin. Again, this chart right here is screaming that the everyday person is losing and about to miss their last chance to buy serious generational wealth. Again, right now, one Bitcoin costs $70,000. That's out of reach for a lot of people already, let's be honest. And I think, again, look at this chart. This chart is insane, by the way. Look at the buying pressure that we saw today. That's if you zoom out, that is one of the largest wicks that we've seen in Bitcoin's history on the weekly. One that was similar to that size is the one that we saw that kind of marked the bottom in mid-2024. Again, zoom out. Look at the other one here in March 2023. This was when BlackRock was quietly entering the market. Again, they launched their Bitcoin ETF prospectus, I think 2 months after this big, massive wick, way back in 2023. What we're seeing right now, if the week closes like this, again, caveat, we still got the weekend to go, and we might still shake out some weak hands and go lower. I'm not saying that's impossible. But what we're seeing, I think, is a coordinated FUD campaign to shake people out of buying their Bitcoin. I think it is as simple as that. Now, again, why am I so focused on this chart that I think's a massive signal that people really need to start buying Bitcoin now? I think it's screaming that you're slowly but surely running out of seats on the Titanic. I think lifeboats on the Titanic is probably a better analogy. The number of Bitcoin held by entities with 1 Bitcoin, 10% of a Bitcoin, 1% of a Bitcoin, it's dropping. But at the same time, the supply is still being bought by the big players. And again, we know that if we run the numbers, like, you need a Bitcoin to retire. Again, I've played around with this calculator so many times here on the channel. We've probably made about 10 videos on this calculator. But as you can see, if you have 1 Bitcoin, and if you want to live on $100,000 a year, and if you assume Bitcoin's CAGR is, I believe it's about 70%, you can see you can retire by 2029. So if you want to retire sooner than 2029, before 2030, you really need more than 1 Bitcoin today. And again, the point of this video is right now, 1 Bitcoin, it's on sale. If you believe in the asset long term, and if you liked Bitcoin at $90,000 like it was 2 weeks ago, you should love it today at $70,000. And as we can see, somebody clearly loves it at $60,000. If we zoom in here and get a little bit granular, boy, I don't want to zoom into the minute chart, but we just might. Look at how aggressively Bitcoin bounced off $59,000. As soon as we went under 60, somebody bought that thing pretty aggressively. And that is why we did the emergency live stream yesterday. And I said, back up the truck. Now is the time to be buying. Again, I think I tweeted this out as well. For the first time in probably 4 months, deployed some capital into Bitcoin. I picked up a little bit of generational wealth yesterday. I put my DCA on pause when we lost this line here, the 50-week moving average. Let's put this on a weekly. Maybe I've cocked up my chart. There it is. There's a 50-week moving average. And for us to be so far below it, like, pretty rare. Look at how stretched away we got it in the bottom of the 2022 bear market. Something similar here looks to be happening in this 2026 bear market. And that's what it will remain until we reclaim this 50-week moving average. As you can see, when we popped above the 50-week moving average in 2023, it kind of signaled the bottom was over. Again, I'm not a trader. Don't encourage anyone to trade. Time in the market is always going to outperform timing the market. But now is a great time, if you have cash on the sidelines, to be buying a little bit of generational wealth. Because as you can see, let's assume you've got 0.1 Bitcoin. This is 10% of a Bitcoin. If you assume Bitcoin's CAGR is going to be 70% per year, you can retire by 2034. Now, I get it. That's what, 8 years away? It's a little bit of time to wait. I personally don't. I'm a little bit more impatient. Personally, I don't really want to be waiting another 8 years to retire. But again, if you play around... Ooh, lost my mic there for a moment. Apologies, guys. If you play around with Bitcoin's CAGR, I want to pull up my favorite little graphic because it shows how Bitcoin's CAGR has changed over time. This is a great little graphic made by Wicked. He's got a great Twitter account. He has the price in the white line. And you can see quick hands around here all night, Hider. We got quick hands. You can see how Bitcoin's CAGR has evolved throughout history. Now, I want to be clear. I've never denied that Bitcoin's CAGR has been declining since 2018. But I don't think that that pattern is guaranteed throughout history. I don't believe that. I don't think Bitcoin's volatility is going to decline like every guru has tried to tell you over the past 3 years. What's the consensus view over the past 3 years? Oh, the institutions are in Bitcoin, so volatility is going to decrease. I do not believe that. Gold and silver are the biggest proof that just because Bitcoin's $2 trillion and the institutions are here, that does not mean volatility is going to decline. Again, I'll just remind you, anyone who missed the stream yesterday, think about this for a moment. Gold right now is a $34 trillion asset. Silver is a $4 trillion asset today. And their charts look like the charts of shitcoins. Look at silver, for example. Silver lost 40% in a week. Again, everybody's dunking on Bitcoin today. They're saying, oh, Bitcoin's down 50% over the past 4 months. But think about it for a moment. Silver is down 40% in a week. And the gold and silver bugs have been screaming, Bitcoin's too volatile to be money. Come on. I mean, at least the Bitcoiners are very open about the fact that, hey, Bitcoin's volatile. It's as simple as that. The gold and silver bugs have been shitting on Bitcoin for being volatile for years. But gold and silver is now more volatile than Bitcoin. This is an attack on the gold and silver bugs. What I want to highlight is if silver can lose $4 trillion of market cap in a week and go from 120 an ounce to 63 at the bottom, which is a 48% correction in 2 weeks, losing $4 trillion of wealth, again, that's 4 times the size of Bitcoin's market cap. If Bitcoin were to add $4 trillion of wealth in 2 weeks, Bitcoin's above $250,000 in 2 weeks. And this is the moves and the volatility that most people just say, nah, it's impossible. Can never happen. This is what the power law gurus will have you believe. I just don't think that's true. So again, keep all of that in mind when we are looking at Bitcoin's historical CAGR and what it's done previously. Because I believe we can see multiple years in a row where Bitcoin's CAGR's 100%, maybe 150%. And most people just think that's impossible. That's why when I'm looking at the retirement numbers, I always like to use, again, not a crazy number, but crazy to most people. I'll use 100% CAGR. If you do use 100% CAGR, let's have a look at 150% CAGR. You can see if you've got 0.1% of a Bitcoin today, that's 1% of a Bitcoin. If you want to sell $100,000 of Bitcoin every single year, and if you assume Bitcoin's CAGR is going to be 150%, well, that means, guess what? You can retire on Bitcoin by 2029. Again, 3 years away. Again, today, 0.1 Bitcoin, that's worth $7,000. That's generational wealth right there. It's incredibly bullish. Again, I love this calculator, When Moon. It is incredible. We've probably made about 5 videos on this calculator here on the channel that are deep dives. So again, if you guys are not subscribed, make sure you're subscribed, because I might even come out with another deep dive on this topic in the not too distant future. I believe one of the videos that you guys liked the most was a breakdown on this When Moon calculator. Here it is. It was 5 months ago. We did a massive deep dive on this topic. So make sure you subscribe so you don't miss breakdowns like that. Because again, if we get super bullish here, something else I've done before is also showed you that a lot of people say, oh, it's impossible to retire with 1% of a Bitcoin. Stop talking nonsense. Stop pumping hopium into people's veins. Stop making videos just for clicks. Again, the maths is pretty obvious. If you got 1% of a Bitcoin, if you assume a 150% CAGR in Bitcoin, you can retire by 2032. It's just the maths. Okay, some people say 150% CAGR is a little bit bullish. I'll remind you, Bitcoin had a 150% CAGR for nearly a decade in its first 10 years. Again, this is the price up to all the way up to 2018. You can see Bitcoin's 8-year CAGR here is 129%. Let's zoom it forward a bit. Bitcoin at one stage in 2020 had a 10-year CAGR of 338%. That's nuts. Again, even if you get a little bit more conservative and you chop out 2009, 2010, 2011, even here in 2024, you can see Bitcoin's got a 12-year CAGR of 120%. So that means even if you chop off 2009, 2010, and 2011 and 2012, Bitcoin's smallest prices and smallest market caps, you've still got a 12-year CAGR of 120%. And again, I like to go through this because people just think it's impossible that we see 100% CAGR. Because we've seen a 6-year CAGR of 40. And Michael Saylor says that we're going to see Bitcoin's volatility decrease. I don't know, guys. This is a great point. BlackRock isn't accumulating just to manipulate the market. They're doing it because they recognize Bitcoin's long-term value. They're buying the dip. BlackRock's probably running the numbers. I want to show you BlackRock's very own report in a moment. Again, let's go back to 120% CAGR. Let's assume you've got 1% of a Bitcoin. You want to retire with $100,000 a year. That means you'd be selling $100,000 a year worth of Bitcoin. And you've got a CAGR of 120%. When can you retire? Actually, you know what? But while we're talking about selling Bitcoin, I always remind you, do not sell your Bitcoin. Borrow against it. That's why I always tell you about my partner, Firefish. I think they should be the #1 place to borrow against your Bitcoin because they're not a black box. They're a Bitcoin lending marketplace that connects you with a lender on the other side of the transaction. So again, if you do want to borrow against your Bitcoin so you never have to sell it, reach out to Firefish. There should be a link down below in the description. They're even going to give you, I think, 30% off if you use promo code Luke. You can get 2-year loans. As you can see, you can determine what interest rate you want and get funds nearly immediately, so you don't have to sell your Bitcoin. Now, if you do want $100,000 of liquidity every year and you got 1% of a Bitcoin, you can see you retire by 2034. Again, I'll remind you, most people say that buying 1% of a Bitcoin's I was about to say something. They say it's regarded. They say, oh, people are just bullshitting you. They're just saying things for clicks. The numbers are right there. You can retire by 2034 with 1% of a Bitcoin, even if you're conservative. What happens if you think Bitcoin's CAGR is even lower? Let's run through the maths. Let's say 100%. 2035 is when you can retire. What about 80%? 2038? It's 12 years away. A little bit too long for me personally. I'm again incredibly impatient. But again, when we've got Bitcoin at $70,000 a coin, there is no excuse why any of you should be settling for 1% of a Bitcoin. Sell a kidney. Don't mortgage the house, but get creative. Somebody is clearly buying a lot of Bitcoin. I'm buying Bitcoin. I showed you. I'm not just speculating. I'm not just talking out of the wazoo. I'm not just filming retirement videos from a park bench or in a parked car. I've retired on Bitcoin because I bought it when everybody was fearful. Again, I was buying Bitcoin when everybody was shit scared of it in 2018. And it feels really similar today. Oh, what have I done? When I got into Bitcoin in 2018, I bought it after it crashed 50% and everybody said it was over, pack it up, Bitcoin's dead. Bitcoiners were talking about the hyperwave and said Bitcoin had to go to $1,000 because of some stupid model. Again, I don't just have hate for the power law just for the fun of it. Again, it's not very popular dunking on a model that's predicting $4 million Bitcoin by 2040. Again, if I just wanted cheap clicks, I'd tell you all to buy because of the power law model. Models will all fail. It's as simple as that. Because we are living through reset times. This is something we've been talking about a lot. And this is a great comment actually by Daniel. Because if you think about it, I said something earlier that might be a little bit controversial. I said Bitcoin's been in a bear market really for 5 years. If you think about it, Bitcoin's peak in 2021 was $69,000. If you adjust for inflation, the official government inflation metrics, this has been averaging like 3% over the past 5 years since 2021. You know what? I'm not just going to talk out of my wazoo. Let's get the numbers, and I want to explain why I think Bitcoin's been in a bear market really for 5 years. Again, you can get conspiratorial, why it's been suppressed, why it's been tampered down, and why for the past 5 years coins have just been leaving the exchanges. They're all just observations. But it's obvious at this point. We know that they've cooked the books. We know that they are literally pissing on our back. And they're telling you, oh, don't worry, it's just raining. Ignore the fact that it's warm and yellow. It's rain. People don't believe their lying eyes anymore. Even if they turn around and get a mouthful, they probably still believe the government. It's nuts. It is really nuts. Let's move on and look at some charts before I get myself in trouble. Now is the time to be seriously going balls deep. Now is the time to buy Bitcoin. Now is the time to sort your retirement while you can. Because as you can see, you are in a very, very, very rare club if you own one Bitcoin. 970,000 addresses hold one Bitcoin today in 2026. And as you can see, it's been dropping for 3 years. The weak hands are getting shaken out and BlackRock is taking your coins. Again, we can see very clearly we are in a new era for Bitcoin. It's very clear. Actually, I want to talk about that chart more in a moment. If you are looking for some smart ways to accumulate Bitcoin, again, I know a few of you guys have said mining's a little bit tough for me, so I'll look for a solution for that for you guys. I get it. A lot of people just prefer to buy Bitcoin on a centralized exchange. But if you are looking for a smarter way to accumulate Bitcoin, I think mining it is the best solution. That's why I always encourage you guys to reach out to my friends at Blockware and learn how you can either buy the Bitcoin mining rigs yourself or take advantage of their hosted Bitcoin mining service. Again, they've done the tough work. They have 6 different locations all across America. They are diversified. They have locations in Texas, Georgia, Oklahoma, to Kentucky, and more. If you take them up on their offer and do some hosted mining, you can plug in miners at any one of those locations and start mining Bitcoin today. Give them an address. Reach out to them down below. All Night Hard is even giving the link to you guys in the description. And start mining Bitcoin today in also a tax-advantaged way. Again, most people don't know this, but if you've got capital gains tax in America, you can write that off by buying Bitcoin mining machines. It's genius. If I was an American with capital gains taxes, you buy the Bitcoin mining machines, you write off your capital gain, and you own mining machines that is generating you Bitcoin cash flow. It's genius. I wish I was American. Let's talk about BlackRock, because everybody has questions about BlackRock. Why is BlackRock mentioned so often? They have an ETF. Technically, they do not own the Bitcoin. I'm not sure if they invest in Bitcoin or not. So privately, they would absolutely own some Bitcoin. Now, I'll remind you of BlackRock's report they wrote on Bitcoin. We've made a lot of videos on this topic. So BlackRock wrote this report, and this was in 2022, and they gave this to their private clients, by the way. I love this. Because when did BlackRock announce they were going to launch their Bitcoin ETF? This was mid-2023. I think it was like June or July. And then they launched their Bitcoin ETF in January 2024. But they published this internal report in 2022. According to a 2022 BlackRock paper, optimal Bitcoin allocation is 84.9%. What? It's real. Look at the report. Asset allocation with crypto. And again, they didn't mention crypto. They were talking about Bitcoin in this report. You can see very clearly. Starting with a 60-40 equity bond portfolio got you wrecked. They said even though Bitcoin has high volatility, the optimal portfolio allocation is 85% Bitcoin, 9% stocks, 6% bonds. It's kind of nuts. So yes, BlackRock owns Bitcoin for its clients, and their clients are probably balls deep, the big high net worth individual clients that they do have on the books. But they obviously own a lot of Bitcoin privately, obviously. And it's 2022 papers like this that kind of confirms what we talk about here on the channel a lot. The reason why Bitcoin have been leaving the exchanges for the past 4 years is because institutions are going balls deep. Institutions are getting their ducks in a row. Institutions have been buying Bitcoin. Institutions do not want to sell their Bitcoin. It is as simple as that. Now that, again, reminds me of a video I saw earlier today. I've had people ask me, oh, what price does MicroStrategy have to sell its Bitcoin? Well, think about this for a moment. We saw Bitcoin's 7th or 8th worst day ever yesterday. On the same day, MicroStrategy had its earnings call. Let's tune into this because I think it answers the question a lot of people have.
For 5 years up until 2032 before we really have a problem being able to satisfy the convertible note. So Bitcoin needs to go down to $8,000 a coin and sit there for 5 years up until 2032 before we really have a problem being able to satisfy the convertible note. So thank you for pointing that.
So there you go. Bitcoin would have to go to $8,000 a coin and sit there for 5 years before MicroStrategy ever had to sell any of its Bitcoin. Ask yourself, what is the probability of Bitcoin going to $8,000 a coin and staying there for 5 years until 2032? Is it 0? No, it's not 0. It's pretty close to it. Just my personal opinion. Again, even if the Bitcoin bears and the critics who think there's a 90% chance that Bitcoin's at $8,000 in 2032. Again, you never know anything for 100% certainty. Even if you think it's 95% certain it's going to go there. There's a 5% chance you're wrong, and that means you should have a 5% Bitcoin allocation. Got one more chart, one more video I want to show you, but let me answer some comments first. We are absolutely seeing an attempt to centralize the money as much as possible. Again, this is why this dip is just noise and it's a buying opportunity. What are the Bitcoin fundamentals like right now? Last year, Fannie Mae and Freddie Mac, they're now forced to accept Bitcoin as collateral for a mortgage. Think about that for a moment. If the two largest mortgage brokers companies in America are now accepting Bitcoin as collateral for a home, again, the housing market's nearly 400 trillion right now today in 2026. Is this bad for Bitcoin? Are the fundamentals getting worse? No. We still have another 3 years of the Orange Man. I think things are going to be pretty good, to be honest. I'm skeptical, don't get me wrong. We haven't seen a strategic Bitcoin reserve yet. But imagine 2 years ago, you'd tell me that we had a president who not only had multiple Bitcoin companies. Again, Trump has I think an ETF coming. He has Trump Media Group, which is an ETF. It's in the top 10 largest, Bitcoin companies, not an ETF. And his sons are talking about a strategic Bitcoin reserve. When we had the mask man, Biden, running the show, and Kamala next in. Like, if you had told me those are the leaders in America, I would have said, oh, Bitcoin's $1 million. We're at 60,000. That's the asymmetry. The fundamentals are screaming. This thing is not going anywhere. This thing is being welcomed. The big boys are buying the dip. You can see it very clearly in the data. This is a shakeout. This is a transfer from weak hands to strong hands. And like we started this live stream off with, this is an opportunity. If gold and silver are screaming and they're rallying, they're telling you the money printer is coming. The money printer is absolutely coming, and you're going to want some Bitcoin. I think it's as simple as that. Now, let's put into perspective how big yesterday's crash and today's pump have been. I don't think Bitcoin's ever seen a $10,000 candle to the upside, but that's what we're watching right now in Bitcoin develop today. Today, we're seeing a $10,000 candle. And what we're also seeing is a very, very, very lopsided market. We can see that the funding rates are now more negative than they were in 2023, in the middle of the Bitcoin bear market. That means when the funding rate is negative, people are paying money to short. We showed you the data yesterday. There's actually 280x the number of shorts than longs in the markets. Think about that for a minute. You've got 280 people betting the price of Bitcoin is going to go down for every one person betting the price is going to go up. That's why we did the emergency stream yesterday. You don't see such lopsided markets without a significant move that's going to catch a lot of people offside. We can see fear and greed is sending you a massive signal. You do not see extreme fear and readings of 5 at local highs. You see them at bottoms. And again, I want to be very clear. I'm not saying Bitcoin can't go lower. Not saying that. Yesterday we zoomed out and we said, look, Bitcoin's had 5 70% corrections in its life. A 70% correction from 126K, clench your wazoos, takes you to $37,000 a coin. Actually, $35,000 a coin. I'm not saying it's impossible. But you should not be flipping bearish and selling your coins at $60,000 when you're 50% down from the all-time high. Terrible idea. Because we don't know where the bottom is going to be. It's very clear each Bitcoin bear market is getting more shallow. Again, we saw 94% way back here in 2012. This is a 94% pullback. Then you saw an 85% pullback in 2018. We saw a 77% pullback here in 2022. If we get a little bit shallower again, maybe a 60% pullback is all we get this time. Again, I'm just speculating because nobody knows where the price of Bitcoin is going to go. We have no idea. ETFs are involved. Even goddamn Jamie Dimon's launching Bitcoin products. All I know is that when you see Bitcoin's one of its worst days ever, that's a buying opportunity. Especially when you're seeing so much volatility in the gold and silver market. It's nuts how much volatility you're seeing right now. Now, you know what? While I'm thinking of traditional markets, something else that I put on your radar and have been putting on your radar for a while now is stock markets. Look what they've done. They've gone straight up for a year. And I'm not going to lie, momentum is starting to slow down just a little bit. Bitcoin just drawed down 50%, while stocks are pretty much trading very close to their all-time high. Again, what do you think is going to happen if the stocks, if the S&P 500 or the NASDAQ just has a healthy 10% pullback? Just a question. Be prepared for anything. Again, do not sell your Bitcoin. Please do not. Again, we're seeing rumors surrounding Binance and some of the biggest exchanges. Please don't be leaving your Bitcoin on an exchange today. That's a really bad idea. Always tell you to self-custody your Bitcoin. If you don't have your Bitcoin in self-custody, I don't know what you're doing. Again, I've got a stack of wallets that I play around with here. I've got the Trezor Safe 7. This is the first quantum-ready Bitcoin hardware wallet. I've got links down below to Trezor's. I've also got an array of ledgers here with me. I think I've got the Ledger Stacks and the Ledger Flex. There's a ton of really great options to go get your hands on today, guys. Different horses for different courses. I think they're all great. I got links to ledgers down below. I also have links to ledgers down below. They're going to give you $10 of free Bitcoin. You buy any of the hardware wallets they have. Again, I also actually, while we're talking about holding Bitcoin, I had somebody say, hey, Luke, kind of a stupid idea to tell the world that you bought half a Bitcoin yesterday on the dip. And that is true. Absolutely, that's true. Probably, again, if I was smart and if I was worried about security, I wouldn't be making videos about Bitcoin, let alone saying I bought half a Bitcoin. The reason why I don't mind saying that publicly is because all my Bitcoin is locked up in wallets that I can't move for years. Again, I have time-locked Bitcoin wallets and multi-signature Bitcoin setups where I can't even move my Bitcoin. So again, that's why I'm a little bit more confident and don't mind talking about Bitcoin publicly. Again, if you also want time-locked Bitcoin wallets or multi-signature Bitcoin vaults, check out Bitvault. They're simply, they're a Bitcoin company backed by Bitcoiners, and they've just made a tool that makes creating complicated Bitcoin wallets easy. That's why I'm a big fan of what Bitvault's done. And again, you can get 10% off any subscription you want if you use the link down below in the description. And again, while we're talking about custody, if you want your hand held in your Bitcoin buying journey, you can also reach out to my friends at the Bitcoin Way. You can actually book a free 30-minute consultation with my friends at the Bitcoin Way. They don't just help you taking self-custody of your Bitcoin. They can also help you with Bitcoin Plan Bs, residencies, second passports, anything you need help with, reach out to my friends at the Bitcoin Way because they can help you. They're like a Bitcoin personal trainer. They hold your hand through any process that you want help with in the Bitcoin space. So reach out to them. Holy shit. Jay's going balls deep. Good on you, my friend. Somebody's taking advantage of the dip. I love to see that. Just don't go telling anyone how much Bitcoin you've got if you've got your real name online. Just keep that in the back of your mind. Feds are everywhere. They're probably more concerned with the guys walking around, swinging around with their, 1,000 Bitcoin. A lot of the candidates on the Bitcoin rich list. But again, kudos to Jay. Dips are for buying. Bitcoin is simply the best financial insurance. Absolutely. Not going to lie, it's actually kind of like nerve-wracking holding dollars. So I think I told you guys a couple of months ago when we lost this 50-week moving average, I put my DCA on hold and I just kind of let it accumulate there for a little while. And look, when you've got, chunks of money in dollars, you're like, oh shit, what if XYZ stablecoin goes under? What if the government starts freezing stablecoins? What if the Australian government starts tapping these publicly traded companies on the shoulder, like Tether or Circle, and they say, hey, I want to know how much stablecoins that Australian with a shit haircut owns or holds. Tell me. They could do that. Publicly traded company. This is why holding zero Bitcoin is always the wrong allocation, even if you're convinced it's going to go lower. I'm going to leave this one here. If you do want to learn a little bit more about just how little Bitcoin you do need to retire, I might put a link to a live stream up on screen somewhere around there. And with that said, stay tuned. Got some more live